Doctors, lawyers, high-income earners, CEOs, a lot of times they're making, let's say they're making $800,000. They may pay $400,000 in taxes.
Mm-hmm. Right, so they make $800,000 on paper, but they may take home, $400,000 in cash flow.
$400,000, $450,000. You got federal at a pretty high tax bracket. You've got state. You've got maybe Social Security, Medicare for some of that, and so that's the hugest expense that they have. And so what real estate does is it allows them to make more money but not be taxed at that high rate for the additional income because of the depreciation and other tax write-offs.
What is up, guys? Welcome back to How to Invest in Commercial Real Estate. We are a commercial real estate investment company called the Criterion Fund, breaking down how to invest in commercial real estate for the everyday person to understand. Today is an exciting episode because we're talking about Tesla. So what does Tesla have to do with investing in real estate, you might ask? Well, Joel is going to tell us.
Well, I thought I was trying to come up with a unique idea for the show today, and I wanted to take it back to about a year ago. I'm driving in my car, and I'm listening on the radio, and I had kind of been trying to learn about crypto, and they're like, Tesla announces they're taking $1.5 billion of cash, and they're buying Bitcoin with it. And up until then, I knew Bitcoin was kind of an emerging thing, but I thought, man, this is a little bit risky. And I thought, here's a publicly traded company, one of the world's richest people, taking $1.5 billion and making a bet on Bitcoin.
Yeah, and like you said, publicly traded company. So I almost think they didn't get allowed into the S&P 500 because of that, didn't they?
I can't remember the details, so I won't comment. But one thing struck me while I was driving is I consider Elon Musk, not only is he now the richest person in the world, but one of the smartest to ever walk around on this ball of dirt. And so what does he know? Because he has a wealth of advisors. They're a huge public trader. What does he know that I don't know that he's willing to take that bet?
Yeah.
And that got me thinking I should learn more about crypto. And I started getting into crypto, and crypto is really risky, and I don't know very much about it, but it piqued my interest of who other big millionaire billionaires are taking large bets on crypto, and why are they doing that? They must know something. And so then I just got to think, we run into so many people that have money sitting in the bank earning $0, but they're kind of afraid of investing it. They don't know what to invest it in. And we can't figure out why they don't see real estate as an avenue or a vehicle for them to invest in.
Yeah. It's mind-blowing how people can't trust it. I mean, you take crypto, again, for example, and you have this massive emerging asset class. I think total market cap of cryptocurrencies right now is close to $3 trillion.
Yep.
So, it gained a lot of popularity really fast, and there's still people out there who aren't investing in traditional forms of investments. And when you take real estate, for example, real estate since inception has been insanely valuable. It's made people money since the beginning of time.
They say that 90% of millionaires made their money or have their money in real estate.
Yeah.
That's a big stat that people should consider is why is it that all the millionaires, a lot of billionaires, hold a lot of their assets in real estate?
Yeah.
There must be something to it.
Yeah, there's tons of reasons. There's tons of reasons why real estate is an attractive asset class, but mainly for wealthy people, it's a great place to park cash because it gives off these several benefits. It doesn't just make money or keep your money safe, but there's tons of benefits. One massive reason to parking money in real estate is it produces passive cash flow, and then the original money is still there.
Mm-hmm.
That's huge. That's huge because you're not forced. Let's say you made $1 million. You created this company. Awesome. You sold it. You made $1 million. What are you going to do with that $1 million?
Yeah, Brian. So you sold or a part of a sale of a company and got a bunch of money, mm-hmm. but that money didn't give you the security to quit your job because it was just in a stock market account or a savings account.
That's right. So it was I put most of it in the stock market, but it really wasn't paying my bills, right? And so, stocks are risky and everything. So I started looking into real estate and investigated what all the reasons are to get in real estate and needed some way to pay my bills. And so real estate seemed to be the best way to go.
Yeah, because a lot of stocks may be appreciating, but there's, way less stocks that pay out quarterly dividends or annual dividends than real estate.
They're pretty low. So usually it's in the, 1%, 2%, 3% range. So that's not enough for my living expenses, right? But yet I could get into real estate, and it looked to me like it was paying off, north of 10% on my money. Well, I looked at the numbers there, and that could let me quit my job and pay, what used to be my W-2 job.
Okay, number one reason then is passive cash flow.
It's huge.
And we have probably, Precision Equity probably has almost 20 deals now paying passive cash flow to investors. Once again, like we mentioned last show, I wrote over 160 checks just last month, over $600,000 in passive cash flow that we paid out on investments. And so that's every quarter. That's not in a year. That's every single quarter we're paying out. And our goal on a deal level is 10 to 20% cash flow. Could be a little lower, could be a little higher. That's a massive return right there. And it's not a theoretical return in the value of a stock. It's actually getting sent to investors. It's something you can put in your pocket. It reduces your risk.
Right. So more importantly, on that, few $1 million a year that you're distributing, are you selling assets and paying taxes to pay out that money constantly?
No.
That's beautiful.
Yeah, we get to keep the assets and continue to pay the distributions.
Yeah. So if you've got Amazon stock, right, and it soared, 20%, which, probably been a minute since it's done that. But to get the unrealized gain that you have, you've got to sell the stock. Mm-hmm. You've got to pay the tax on the sale.
Well, and the dividends that you'd get from the stocks, you have to pay taxes on those.
Yeah.
When I'm not,
as opposed to,
and I'm not, we won't get into exactly the difference, but the investor may have some tax liability on the distributions we pay. But like you're saying, Braden, they don't have to sell 20% of their stock to get that 20% that it's gone up.
Right.
Right. The value of the asset is still going up, and you get the distributions, which we'll cover here in a second.
Yeah. Yeah.
All right. So number two, I have down appreciation. Okay. And so let's talk about that, because it's not magic. Values go up over time because of things like inflation.
Right.
And right now we're entering into a very high inflationary period where, because of all the money getting dumped into the market, prices just tend to move upward as the value of the dollar slightly decreases. And so commercial assets that are based on rent and the net operating income is what values those. And if you can, charge a little more rent next year because of inflationary pressure or whatever, that drives this appreciation value. Okay, but let's say, Joel, but appreciation may only be 3%. I'm going to try to do quick math for you on 3%. Let's say you've got $1 million building, and it's going to appreciate 3% in a given year. Mm-hmm. Okay, so what is that? $30,000.
Yeah.
Okay. All right. So your building went up $30,000. Say, hey, that's $1 million, $30,000. That's not a huge deal. Well, it is. It is because we didn't pay $1 million for it. Right? We got a loan and we only paid in cash $200,000. Let's say 20%.
Right.
Okay. So now I have 20% is my investment is 200,000, not $1 million. Mm-hmm. So I take that 30,000 and I divide it by my investment of 200,000, and that's a theoretical return of 15% just on appreciation. Mm-hmm. Yep. 15%. Now remember, we're getting cash flow of 10 to 20%. Now we're getting appreciation of about could be 15%. Versus our initial investment. Yeah. That's huge.
That's a good return.
It's massive. You can also look at it in just sheer replacement cost. I mean, 50 years ago, how much did it cost to build a building, to build a house? How much were the cost of materials? How much were the cost of labor now? I mean, you can look at it now. If buildings cost, $200-$300 a foot sometimes to build, and 50 years ago, it may have been, half that.
So that's driving up the price of older ones because, hey, it cost me so much new that then it increases the value of existing buildings.
Yeah.
Next one is tax benefits.
Yeah. Tax benefits. I mean, yeah. So like we've explained earlier, you can get money out of commercial real estate a bunch of different ways without being taxed. Absolutely legally. Perfectly fine loopholes that they purposely put into commercial real estate so you could get cash flow out of real estate without paying taxes on it, maybe until you sell. It's a very big one, because when billionaires are looking at how to make more money, it's not necessarily how to make more money. It's just maybe how to pay less in taxes.
Absolutely. So the advice I give people that are asking me about this, especially high income earners, doctors, lawyers, high income earners, CEOs, a lot of times let's say they're making $800,000. They may pay $400,000 in taxes. Mm-hmm.
Right. So they make $800,000 on paper, but they may take home, $400,000 in cash flow.
$400,000, $450,000. You got federal at a pretty high tax bracket. You've got state, you've got maybe Social Security, Medicare for some of that. And so that's the hugest expense that they have. And so what real estate does is it allows them to make more money, but not be taxed at that high rate for the additional income because of the depreciation and other tax write-offs. Now, we're not accountants and we're not going to specifically give advice on this factor, but just the point we want to make is that why millionaires and billionaires invest in real estate is for a lot of reasons, but one of the reasons is how much less you can pay in taxes per dollar earned, even if you're a high income earner.
Yeah, and we've talked about the compounding. When you take out the passive income from real estate, and you don't have to pay taxes on it, and then you go invest it somewhere else, the tax savings that you don't have to pay is really compounding really quickly. For sure.
Yeah, so people recommend 401k accounts as good investments, surely because you invest with pre-tax dollars. Mm-hmm. So, I mean, thinking about taxes is an obvious thing, but there's better ways to have investments that are in a more tax-favorable environment. Yeah. It's just a fact.
It's your largest, for most people, it could be their largest expense.
More than a mortgage.
Yeah, more than a mortgage. So reducing that should be a priority, especially for high-income earners. It should be a main priority. You should become a tax expert. And you should learn which investments are going to have the most tax leveraged benefits for you.
Yeah, let's go back real quick to my example that I was saying before. So if I had just left all my money in the stock market for my living expenses, I would have had to sell every year to get my income, and I would have had to pay taxes on that sale. Well, now I have it coming out of passive income out of real estate tax-free.
Yep.
Yeah, and the stocks are still in the market appreciating without the need to sell them and pay the tax.
Yeah.
All right. Next we have is leverage, and really this one gives the benefits, some of these other benefits.
Yeah, people may underestimate this one, but this one's huge.
Yeah. So you can borrow up to 80, 85, even 90% sometimes of the value of the real estate. That right there should tell you how secure of an investment it is versus other investments.
Yeah, if banks are willing to do that, they think it's secure, right?
That's right. They can secure. I mean, just think about other assets and say, hey, I want to buy this asset. Who's going to loan me, 90% of it or 80% of it?
Yeah.
And you're going to get told no. And even if you are like on a business even, you may get 70, 80%, but they're going to want that paid back in 5 years or 10 years, where real estate, the banks say, hey, you don't have to pay me back. Let's do a 25-year amortization. Let's do a 30-year amortization. Or in the instance of HUD, let's do a 35 or 40-year amortization. And so that is a powerful benefit because it allows you to get more real estate. And the more real estate you control, then that's where the appreciation kicks in. Your appreciation's not on the money you have in, it's on the total value of the real estate.
Which you're going to get back out.
Right. And the lender isn't getting a cut of the upside.
That's right.
They're getting a fixed low interest rate that they're borrowing from somewhere else. And again, just to go back to our example, if you're going to go buy $1 million worth of Tesla stock, $1 million worth of Amazon stock, and you come to me and you say, hey, will you buy me $1.8 million of Tesla stock and I'll give you $1 million? I say, no in hell, man. No way. And you can definitely trade on margin. People love crypto trading because you can go in and put these stop limits and trade, 20, 30, 40, 50% margin of using somebody else's money. And that's a lot. That was a lot compared to the stock market. But in real estate, you can buy, a couple $1 million worth of real estate for way less.
Yeah. Like I said, 20% down usually can get you the real estate. And so that's 80% leverage, and you just can't get that in most asset classes.
Yeah.
Okay, let's see. Next is principal pay down. And I don't know if people really appreciate the power of this because most people equate principal pay down to like the mortgage on their house.
Yep.
And so they've got a $200,000 mortgage on their house and they've got a 30-year AM, which is a long AM. And they just never seem, I'm not really paying it off that fast. This isn't a big deal to me.
Right.
But in commercial real estate, it's super powerful because not only you're not making the payment. Okay, think about that. That's the paradigm shift people have to have here, and I hope they can get it, is your mortgage you got to pay.
Yeah.
And so, I'm not paying this down at all, and then I got to pay all this interest. But what if I told you could buy commercial real estate and you wouldn't have to pay the interest, right? You didn't have to pay the principal. Somebody else pays that for you. All you got to do is come up with the down money, and then everybody else takes care of the payment. Yeah. Well, then you'd see that as powerful. And let me give you an example. Just year one of a 25-year amortization payment on a commercial note, okay, is a little over 3% of that mortgage you're going to pay that first year, or the 3% of the value of the property, actually. And so once again, not a big deal, but it is because the tenants are paying that. It's not coming out of your pocket, so it's pure upside for you.
Right.
So take the 3%, like we did with the appreciation, and put it over the 20% down you have in the asset. That's another potential 15% return on your money. Now, you don't get that in your pocket, but it's absolutely real. We have a portfolio where we have tens of millions of dollars in loans. The tenants are paying those off for me over time. So you can just imagine what's the pay down on $70, $80 million of mortgages. What's that pay down every year?
Yeah.
That's going into our pocket, my investor's pocket, and it's automatic. It's like clockwork. So I think pay down is a huge benefit with commercial real estate, because once again, you're not making that payment, the tenants are, and if you buy well and you have good real estate, then you're getting cash flow on top of that. You're getting appreciation on top of that.
Yeah. Some of our listeners can relate to that because maybe some of them have rent houses, right? So they know what it feels like to be able to collect the rent, and actually they're not paying the mortgage, right? And so they can kind of relate to that. This is just on a bigger scale.
Yeah, similar story, but life insurance companies, if you've got life insurance, right? A big fun facts to know and share is life insurance companies love commercial real estate. Why? Why do life insurance companies love commercial real estate?
Because it's safe.
Because it's safe. Because it's safe. And they need somewhere else to invest your money before they have to give it to you because you're going to die, right? You have life insurance, you're going to die. So before they pay that out, they want to take a bunch of other people's money and get paid on that money. Very similar concept. Very similar concept.
Yeah, and they have to have that money to pay out, so they're not going to invest it in something that's risky.
No.
They're going to invest it at something that is safe, but it's going to earn them a return, so they're not just holding in cash.
Yeah,
Yeah,
life
and
insurance companies are very conservative. So,
and they've got billions of dollars. They may have $10 billion in cash. So when you think about, they only make 3% a year on that because they're doing super safe, super amazing loans on commercial real estate. Well, 3% on $10 billion of somebody else's money is a lot of money. It's a lot of money.
For sure. All right, last one before we wrap it up is the power of refinance. And we have covered this a little bit in the past, but we have extensively used this to benefit and grow our real estate portfolio, is that you get to we're paying it down, we're paying the principal down.
Yeah.
We're appreciating in value.
Yep.
So I don't have to wait 25 years to get to the equity in that value or that property.
Right.
You can refinance. And now I get to take advantage of both the appreciation and the pay down, and I get to take that money out. And the greatest thing is you're not selling the asset. I get to keep the asset, so the asset keeps going up in value. I get a new loan on it, so now I'm paying down a new loan. So I keep all the benefits of the real estate, okay, but I get to put the money in our pocket to go reinvest in a new deal, and it's completely tax-free because it's just loans, proceeds from a loan.
Nah, there's no tax-free money. What are you talking about?
Yeah, this may be some of the only tax-free money is you go borrow money against a value in real estate, and you get to put it in your pocket tax-free. Similar to your house, you may refinance your mortgage, and you're not paying tax on that because it's not income. It's just a loan. Well, we do that on a scale of millions of dollars of commercial real estate, and so we take that money tax-free.
Yeah. Okay. So you didn't have to pay for the original loan, we said, but are we paying for this new one or?
No, as cash flow increases, you get a bigger loan. The tenants are still paying off the new bigger loan. I don't have to. I'm not paying off the new loan. We've done that so many times with apartments where we'll buy and the rents will go up, the occupancy goes up, now it's worth more. We borrow money and our payment goes up, but who cares because the tenants are still paying that mortgage payment. The cash flow is in excess of that mortgage payment. Yeah. So then we take all that money and we can distribute it to the investors. We can reinvest it, and we're reinvesting tax-free dollars. So think about back to the example of high net worth earners, high income earners, is they only have what's left after taxes to invest. But what if they could say, hey, before I get taxed, I'm going to invest $800,000, this big salary that I got, I'm going to invest all that money. They can't do that. They have to let the government take half, and then they can only invest whatever they don't spend. Where here, you get to take all of it and invest it before it gets taxed.
Yeah, it's fantastic.
That's ridiculous. I mean, the refinance is one of the most powerful tools because you're not forced into selling the asset. You're not even forced to stop at just getting your cash out. Like, hey, I put $1 million in. Oh, on the refinance, we're only going to give you that $1 million because that's all you put in. a lot of times they don't care. They'll give you way more than your million because the asset they're lending against is still safe enough to where if you default and they have to take it back, they can recuperate their position and probably end up making money off of it.
Yep.
They're probably hoping you default.
Some are.
There's so many amazing benefits to invest in commercial real estate. And I still see and talk to so many people who aren't involved in it. But yet you look at Shiba Inu, you look at Dogecoin, and it's got a market cap of like $80 billion.
Well, between the two of them, yeah.
Yeah.
And
$80 billion.
So yeah, people have decided to invest $80 billion of their hard-earned cash into meme coins. Now, there's an expectation that they might go up in value, but what people should really appreciate is that yes, but that's still a very risky position. But people are still unsure about getting some of their money invested into real estate. Yeah. They're still, they have money like, hey, what do I do with it? How about some real estate? I don't know. That sounds risky.
My money.
So what we're trying to get people to realize is there's a reason why the world's richest and most influential people hold a lot of their net worth in real estate. And it's because they don't know they know what you don't know about real estate, and we're trying to educate you.
Yeah. So when you want to go to a place to learn how to make money, you should maybe follow people who have made money and are currently making money. And when they're investing in these things, or when 90% of the world's millionaires have been made through in real estate, or when all of this wealth is being held in real estate, you may consider not just looking up for yourself or deciding for yourself, you know what, I decided I'm going to invest in real estate. Have a reason, look into it, develop a thought process of why are all of these people doing it, and try to disprove it. And then maybe that will make your case to invest in it.
That's a good point. Yeah, I agree. I hope this was helpful. Real estate, as we think, is one of the most powerful tools. And the last thing I'll say about it is, yes, everything has risk, but the risk reward profile for real estate over the centuries has proven over and over to be a safe bet. There is risk, but the rewards outweigh the risk. The risk is relatively low compared to the gains you can make.
Agree.
Right.
Thanks, everyone, for joining us on this episode of How to Invest in Commercial Real Estate. Tesla.
Like and subscribe.
That's right.
Comment if you've got a question. We'll answer it, and we will be back next week with another episode. Thanks, guys.
Thanks.